Good evening, reader. So we're going to look at Riverstone Energy, and this. Um, so this is their website. This is their portfolio of holdings, so various different. It's what I have in this article termed the green and the brown, and green being, of course, environmentally friendly. Investment holdings, the brown being the fossil fuels. So kind of the two contrasting types of holding, and the history of this, that it started off life as a fossil fuel based natural resources investment trust. They changed strategy to pursue green, pursued it at a time when um, green holdings were expensive. Since then, there's been a massive re-rating. Um, so Riverstone has had some certainly had some reductions in its green portfolio, but equally the time that its green portfolio was growing, the brown or the fossil fuel portfolio was doing terribly, really, harboring very, very large losses. A few years later, it's all turned on its head. The green has gone down, the brown has gone up. So if we have a look at their portfolio, I've got it on this. We can see here that, for example, Permian Resources a year ago was sat at 1.35 times earnings, and in the latest, they're now at 1.41, and so on. So the fortunes have kind of tipped both ways, and uh, the largest holding by far is Permian Resources. So we'll spend a little bit of time looking at that. Onyx as second largest, which is a power plant, German power plant, so coal power, gas power, biofuel power. So it's a traditional energy player, but of course, baseload energy for Germany is not a bad play, because, of course, with high levels of renewables, there'll be times when base load is able to capture some very high power rates. And then Veren Energy is based in Canada. And then we have a couple of green. This is the brown. As you can see here, these are the green holdings. So we've got Infinitum, GoodLeap, Solid Power, and Group 14. So there's a couple of different holdings there. I just wanted to call out a couple of things, really. So Permian announced their latest earnings back yesterday. Now, just kind of in the interest of full disclosure, the share price has dropped from about £8, and I should add, Riverstone do a lot of buybacks, so they don't pay dividends, but they are on a daily basis buying back shares. And if you go back a couple of years, the shares have reduced and reduced and reduced. I mean, you can sort of see here if they've currently got 25, or had 25 million shares. If they used all of their cash to buy back shares at an assumed $9.75, they'd be able to buy back 8 million shares, leaving them with 17. So it's kind of heading that way. It's probably fair to say, but obviously it's they're buying back shares. 100,000 a day or a few 100,000 a day, that kind of thing. So just in the interest of full disclosure, I calculated the latest share price, and as I speak, so it's at 13.88 as of just now. So at the last update, 31st of December, it was 14.38. So we can see, in other words, it's dropped 5 million. So this 145 is now 140. essentially. But we can see over here what we're doing is this comes out at 9.77. There's £2.50 of cash, and then unlisted holdings. So that's the private holdings. So all in all, there's 1468 minus 79p. So we're looking at sort of close on £14 NAV. But despite these falling in value, I wanted to call them out because I think that they're not going to remain at um, 1388 in the case of Permian, for example. And let me show you why. So looking at their latest earnings, so this is the full year earnings. So we can see Permian, very large. Well, the name gives it away. They're based in Texas in the Permian basin, so Delaware Basin, Permian Basin. So they're very large oil oil uh, explorer producer. As you can see here, 450,000 net acres, royalty acres, 370,000 barrels of oil a day equivalent production. So that's pretty decent, pretty large volume. Yeah, just some give dividends. They've tripled their dividends in 2024, so it's a 4.3% yield. And yeah, if we just sort of move through some of the stats, you can see here. Now this is interesting. So this is the overall average for 2024, and this is their performance in the final quarter of 2024. So that kind of gives you an idea of how rapidly this is growing when the average is 160 and the final quarter was 172, so about 10% higher than the average for the year, and 5% on the natural gas and about 10% on the natural gas liquids. So you can sort of see a real growth, not just a growth in production, but connected, as you'd kind of expect, a growth in earnings. So 3.7 billion overall, adjusted earnings, adjusted EBITDA earnings, but nearly a billion in the fourth quarter. So 4 billion annualized again is about eight 8% higher, and here that annualized would be about 1600, 1.6 billion versus 1.35, 1.36 for the year. So some really good growth. See the operating costs, $5.42 per barrel of oil equivalent, really cheap. That is incredibly good a good number. And we can see they've got nearly £500 million of cash. They've got obviously a lot of debt, 4.2 of debt, but net of cash 3.7 net debt. And as you can see here, the earnings are close on, so they could sort of theoretically pay off their debt in just under a year. If we ignore depreciation and taxation and interest payments. So in reality, that you wouldn't probably pay it off in a year, but you would get pretty close. And certainly within 2 years, you could say, this company could be debt free based upon its current earnings level. Um, so yeah, just to sort of show you a bit more. I mean, obviously, the reason that they're maintaining debt is to support growth. So we can see the cost per meter drilled is dropping compared to prior periods. Dividends, as I said, tripled. The production guidance. So interesting that this is outperformance. So they forecast the grey. They made some acquisitions, so bolt-on acquisitions is the yellow, and then the orange is actually sort of where they've gone above target. So some really good performance there. Liquidity, so free cash flow has gone from 2.1 to 3, and of course, during so during the year of during the year of 2024. I mean, if we look at crude oil, it's not as though these guys have had sort of just, this is the 1 year forecast. So if anything, now oil is lower than it was a year ago, and the average for the year is what, probably about 70 something. So it's the fact that the cost of production is so low that they're making really, really good profits. So really, really, quite an impressive performance. So you can see here, compared to Occidental and so I don't know all of these tickers, but these are sort of comparable oil producers, and some very attractive cash costs, and that's the exploration cost per foot of and this is a stat that I've not used before, but that's kind of how they're comparing, and they're about 10 or 20% cheaper than their peers. So some, as I say, they're replacing their reserves as well. So it's not like they're eating their seed corn. They've got, as you can see here, they've got some really nice acquisitions during 2024. So all looks pretty good. If we went and looked at the average analyst, uh, pretty much across the board, it's a strong buy for most for most analysts. Yeah, um, so the biggest one, Permian, I'm pretty comfortable with that being the largest one. It looks good. As I say, the dividend for Riverstone Energy shareholders is kind of works out at about 28p on, as I say, on a share that today is trading at about £7.30, I would say. So if we went and just quickly look at our ticker RSE, so this is a UK listed investment trust, so Riverstone Energy, and yeah, so you could buy at 764, which is about £7.64, puts the whole thing on 189 million market cap. And you can see down here, I've yeah, this is the market cap here. So so um, so yeah, what I've done here is take that shares an issue, that share price. So yeah, and that, sorry, I'm just trying to trace back where. So if we plug in the numbers, so £7.80, if we plug in that as 764, we can see what we're kind of looking at here is so it's on a 34% discount to its last NAV. Excluding cash, it's on a 47% discount. So the last cash being, I think it's this number here, 79 million, which is £2.50 a share. And if we sold off all the listed companies, Permian and Veren and Solid Power are the three that are public, these light blue ones here, here, and here. Basically, you would get back, you would be paying sort of, essentially minus 40% for the private holdings. So you get more for each £7.64 share that you bought, and if you cashed in the cash and you sold all the listed companies and turned that into cash, you'd have 40% more than £7.64. So you'd have about £10.50, plus you'd still have a few pounds worth of private holdings. So it's on the basis that these are highly liquid shares as well. Permian, as you can see, is a very large company, several billion. So yeah, all to the positive. The second one is Veren, so let's just kind of go and quickly look through that one as well. So Veren, this one reports tomorrow. We've only got the third quarter update, not the fourth quarter update. So I'll just sort of walk you through the latest update presentation from them, which was last month. So again, you can see these are not a small holding. So production of nearly 200,000 barrels of oil per day, majority liquids, so one third gas, two thirds liquids, and again, 4.8 million market cap, net debt 2.6. So it's a large holding. Again, it's replacing its reserves. It's as you can see, it's got sort of reserves across different parts of Canada, so Alberta and Saskatchewan. See, that's reserves again, and we can see here, in terms of their forecast for 2025, they're looking to spend between 1.5 1.6 billion US, I think this is, and yeah, US, and they're kind of seeing they're kind of seeing a funds flow at $70 oil of this, at $75 of this. So development capital, additional items, that's acquisitions, basically means that at $75 average oil in 2025, that would give them headroom of 775 million past capex. And what they're looking to do is basically to obviously pay shareholders dividends, and also to do buybacks, and also then to basically do a 60-40. 40% goes to pay down debt, 60% goes back to shareholders. So very, very sort of strong reserve returns focused, looking to grow cash flow. As you can see here, they're looking to grow cash flow by 15%, looking to grow production by about 5 to 7%, and again, looks good. Certainly, the results 1 to 3 have been reasonably good. Obviously, Canadian gas has been in the doldrums in 2024, as was US gas. When I say in doldrums, it was at a very low price. There's the LNG terminal in Canada coming on board in 2025. It's going to be in August, I think. So whether that will be something that's directly beneficial to Veren, I don't specifically know that, but generally, I think we're now at a point where we're seeing a reversal of the surplus of gas and the deficit of demand to a much more buoyant demand and a deficit of supply. So there's a little bit of a turnaround that we're seeing there around the outlook compared to last year. So I do feel Veren has kind of ended up getting punished, whereas the future doesn't look the same as the past. So as we can see, generally the debt is on a reasonable timescale. The debt outlook is, again, it's we're not talking about this being heavily indebted, so they're at 1.1 times EBITDA, adjusted EBITDA, I think this is, and looking to drive that down over time. As we can see here, they're working towards a long-term plan of growing the business, and just strengthening the balance sheet, and yeah, again, I think this, if we have a look at the current holding is 43 million, and we can see that the investment into this was 296, and 242 has been realized. So we're kind of 285 out of 296 is so we're sort of yeah, I do think this could could have better times ahead. Final one, Onyx, is privately listed, so this isn't publicly listed. But as I say, this is base load electricity. If we go back to this chart here, this is so this isn't German electricity, but this is German gas. So, but this kind of gives you an idea on energy prices over the past year in, well, it's TTF, so this is the whole of European gas. We go and look at German electricity. So currently 128, so that's the 1 year picture. So a year ago, electricity was about half of what it is today on a per megawatt uh, megawatt hour price. So um, it's interesting because in the last update being here, they spoke about how margins have reduced materially from the highs of 2022 due to high gas storage levels, or a warm winter, high wind and energy conservation. So it's interesting because this feels like this is talking about not the winter that's just gone, but the winter before. And the past winter has not been warm. The one before was relatively in Germany and across Europe, but the I think the statistics are that the the latest winter is a lot colder, and gas storage, European gas storage, has been dropping far faster as well. So again, this looks much more negative than I think future updates will reflect. So if we quickly look at um, these are the different assets. So these are basically coal power stations, but these are cutting edge, built in the 2010s. So about 45% efficient, which, if you know anything about uh, fossil fuel power plants, that's a good number. That's actually a really efficient number. They obviously do some stuff around only buying coal from certain places with sustainability criteria. There's also some district heating. So we've got a combined heat and power going on. So they sell the heating to businesses and to homes, but also generate electricity. So you kind of, that's where you're going to get more than a 45% efficiency, because with CHP you can normally get that to about 60-70% efficient. So it requires investment, but that's kind of what Onyx have been doing, and also converting coal over to biomass. So the idea being that you swap out and replace, and this is what they're doing here at this Zollin, which I think is the one in Holland, if I'm not mistaken, to basically burn, a bit like what Drax have done in the UK, to burn wood and wood chips rather than coal is the idea. And then, so yeah, essentially they've got three coal plants, a CHP plant, and yeah, they're sort of working on various different initiatives. So I think if we went to media, we could see that, they're sort of switching over on the coal at Zollin, that's going to go bio. They've signed agreements with district heating. So yeah, all looking positive. They've stopped the coal at Farge, so they're moving that one across as well. So we can sort of see progress across different plants and so on. So again, all three of these now, they all sort of have been in the wars a bit, but actually look reasonably positive. So just going to quickly cover the other ones as well. So GoodLeap. GoodLeap was one where people were quite worried about the Inflation Act being, the Inflation Reduction Act being thrown out, but Trump's been in power now a few months, and there's not really any sign of that happening. There's been some talk of aspects being being withdrawn. But the reality is that, well, we can see here that you know, California bill improves electricity affordability by using virtual power plants. So things are sort of carrying on as normal, really. So that's all for the positive. This idea of a virtual power plant is this idea of what in Britain we call behind the meter storage. If you watch my prior video about Gore Street, and I wax lyrical about how if only the UK government would unleash the power of behind the meter storage, so domestic homeowners and businesses being able to sell electricity and power back to the grid and get rewarded for it. Basically, that's what a virtual power plant is. So this is what GoodLeap have kind of ended up doing. Traditionally, they were a kind of funding um, body to a sort of facilitator to facilitate grants and funding. So you'd buy a load of solar panels and pay over 2 years or however many years of sort of to buy those panels, and obviously take advantage of grants and subsidies. But they're kind of now heading much towards sort of, let's position ourselves as specialists in VPPs or virtual power plants, to it makes the homeowner independent, but it also can produce an income. So the idea being that you can buy electricity when it's cheap and sell it back to the grid when it's expensive, which is what obviously the wholesalers do, and sometimes make a lot of money doing that. So the more people that do it, the 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 more reasonable electricity prices would be. So it's a pity our government haven't followed California and other places in America's lead, that we're behind the times. But that's my moan for the day. Anyway, that's that one. The remaining parts of the portfolio. I mean, Infinitum, I really like this one. It's a essentially an AC motor. They're potentially going to list. There'll be an IPO potentially at some point. They've just discussed and obtained a grant for producing I think it's the PCBs that go into a AC motor. So the core product is this air core um, AC motor, and the idea is the AC motor is smaller, lighter, quieter. Because it's smaller, lighter, you don't need a crane and lots of equipment. It's easier to handle, easier to install. A lot of the parts are recyclable, so they've got 100-year lifespan. So if one bit goes, you don't have to throw the whole lot in the bin. You can just swap out the bit that's broken and the rest of it's fine, or it can be refurbed, that kind of thing. So as you can see there, it's about 10 to 15% more efficient through just more efficient, minimized wiring, direct mountings, but also um, the motor control is using a PCP stator that uses less materials and more reliable, uh, more easily serviceable. So lots to like about this, essentially, as you can see there. And because they've got it hooked in with Internet of Things as well, so basically the motor can tell you when it's detecting that it's got a problem, Houston. So all good stuff, all good stuff. So that's that holding, and a couple of other smaller holdings. There's the Solid Power. So this is a solid state battery. They're working with BMW. They're working with Ford, and they're working Volta Energy, which is I think in South Korea, if I'm not mistaken. They're connected with the Samsung portfolio. So yeah, again, both Ford and BMW seem to be very supportive of the technology and the potential of the technology. So the jury's out with this one. It's publicly listed. It's currently trading at $1.24. So it's, yeah, it's one of those that's sort of been in the wars a little bit. Of course, went through a bit of a hype cycle potentially, and that's 124. So if we look at the 5-year view of it, we can see, it was up at $12 and now it's at $1. So it's 90% down from its peak in 2021. But yeah, if it can deliver on its promise of a electric vehicle that can go 6, 7, 800 miles, then clearly it won't be $1.24 anymore. So the jury's out on that one. And then the final one is Group 14, which is this is quite a good Donald Trump tariff trade. So this is battery metals, and particularly the silicate that goes into a battery. These guys produce that silicon anode. So they've got a factory in Washington State. They're building a second factory. They've got some Department of Defense grants, I believe it's fair to say, and yeah, again, quite an exciting holding, I think, but again have reduced in value in the latest update. So we can see here, Group 14 reduced from one times invested capital to 0.75, so reduced by 25%. So we'll see. Jury's out. I mean, that the reason for the reduction there was to do with the delays. There was some delays, but I think that's potentially something that could reverse in time. So yeah, the bad news is that, of course, if you are a Riverstone Energy holder, that there's been some reductions. It's still, as you can see, even despite these reductions, there's still a good chunky amount of discount built in. Well, I think there's reasons to feel that Permian and its other holdings could reverse in 2025. So yeah, I'm feeling quite, I quite like this actually, and I certainly like its holdings. So yeah, just wanted to share that, and hope that's been useful. Okay, so if you want to read this article and others, the Oak Bloke Substack is at oakbloke.substack.com. And if you want to look for something like Riverstone, for example, just come up to this magnifying glass and start typing in Riverstone, and you will find articles relating to it and to other things as well. So hope that's been useful. Oak Bloke signing off. Cheerio for now. Cheerio.